This episode is sponsored by EXACTUALS, perfecting insurance payments and the data driving them.
So you've really been not only close, but really have been speaking with and meeting a lot of people who are at the forefront, and you are one of those people at the forefront of InsurTech and insurance innovation. You just mentioned you left Farmers 3 years ago, and
more.
A couple, well, yeah, time flies, I guess. But you
Yeah.
mentioned a
It doesn't
platform
matter. Yeah.
that was started and has just been shut down again. If you can talk a bit more about that, because I think it puts a bit of a not really spotlight on it, but there's a lot of talk about fail fast and let go of your most beloved projects at times if you realize that they don't really get the traction. But typically, if an organization is actually quite mature in their maybe transformational journey, then they will have fuck-up nights or something, and that is where they might talk about those failures, but otherwise you don't really learn much about it. And, it's rather, I think, to be seen as a stepping stone rather than a failure. Nobody can just start from scratch and be super successful with everything they do. So maybe if you're okay with that, we can talk a bit about that.
Sure. Mm-hmm. Yeah, we can. Yeah, no problem about that. So there are several things that you said here that we can slice and dice. And it starts from, that hype or that, move fast, break things, fail fast, or fail cheap. I agree and disagree with that because it needs to be in the right place. I think that one of the things that we are bamboozled by, or a little bit also, there are a few hypes over there, especially for startups. And we need to differentiate between a startup and a project within a company, right? Different politics, different structure, different funding, different risks that need to be taken. Now, we love to talk about it because it's a cool hype that came from a successful startup or a very famous tech celeb. It's great to fail fast, but at the same time, people don't like to fail. We like, and most of the time we hear success stories. So, and I've been taking notes for another book, and I've been saying that for at least 2 years. I call it 9 out of 10, right? 9 out of 10 companies fail. We never talk about failure, why things, why projects, why startups, why company fail, and what was the origin, and especially what are the lessons learned. Now, today, if I would start Bound, I would do it completely different, but including the I would say the pivots and understanding from our customers through the time, that it should have been different. Now, you said so many different things, and I already started to go through on 5 different threads here. So do you have a specific question? And then I'll be more than happy to analyze that and answer that specific thing.
Well,
let me answer the Bound one. So for example, with Inbound, and I'm always happy to talk especially with other founders that enter the insurance, and it's also a generic. We were too early, and basically the first 2 years, it was advocating the concept of embedded insurance. Now, we can say that we had failures of communicating that, although now it's the hype because it caught. At the same time, there was, I would say, the failure of finding the good use case. Now, we were actually there with a few different types of products. So a small, premium, specialty, GL, PL, and it was at the end of the day, we realized, because we wanted to keep ourselves pure technology, We were not licensed. We were just a platform of providing the embedded insurance, the relationship management, the payment management. That's very simple, not taking commission. So not disrupting that part, which actually that's a mistake. You need to be part of the, 3 years ago, you needed to be part of the distribution and the insurance. So it will be easy for the carriers to understand, just a second, are you a wholesaler? Are you a broker? Where are you? Are you taking part of the premium? And the answer should have been yes. While we were like, no, you're going to pay us to integrate with your API, create this map, create this marketplace, and you're going to get basically, and what I'm promising you is bigger revenue and increase where you are, and of course the efficiency. And today, later on, and that's where we're going live with 2 large carriers and a huge wholesaler. It was all about, you have this long tail problem of agents. Now you like to sell direct and be efficient. Now all these agents that don't sell GL because they will make $10 after 5 hours of work, turn them to a direct sellers. So they can embed your insurance on their website, right? So all that efficiency, it was very hard not to sell. It was very hard to comprehend because, let me get it. I need to invest money so later on I may or may not get benefit and give, let's call it love, to the agents and my distribution channel. So that was a little bit hard. Today we see beautiful traction from companies that said, Coterie, and then other folks that are actually doing the sales, right? Coterie, it's B2B. But Brisa, Apollo, all these guys that recently were on my podcast and many others, they are the broker. So they are providing, also Lair, for example. They are the broker, they are them. And for them, it's like, or they are the MGA, and they say to their agents, here there is a solution. I don't want to deal with the other carriers, but here is a solution. Now you can sell that. It's coming from the inside. Now you need to think about, okay, what's the next step on that? What is the layer that you can work with everyone? And how do you provide a seamless integration with multiple carriers based on your appointments, etc., etc. But we can talk more and more. Thomas, let me ask you a question. So last time we met, you were here in Los Angeles. You were still with Munich Re or with Shift or?
Yeah.
Where?
Right in between that was. So that was in the summer of 2018. And I think oddly, perhaps we met over a good cup of cappuccino in LA.
It was, yeah. It was the Australian coffee on Main Street. Yeah.
So, I mean, for myself about this, at that time I had just left Munich Re, where I had spent the 20 years before that in Munich, US, Singapore, and back in Munich, and then kind of had evolved towards claims innovation. And I think the bigger, if you will, lesson or example perhaps about that story is, I think we had before that been in touch a little bit via LinkedIn, but not all that much. And I was on a mission to not only do vacation in California, but meet a few people. And so I had reached out to you to meet in person and have a chat. Much like we're doing it now, more pandemic conform. But I would only recommend to be, as active and open and transparent on, let's say, LinkedIn as you can, to identify people you can work with, and then though add that extra step to actually reach out and have a conversation, be it in person or in a separate meeting. And that for us, I think has then since then laid the foundation for our relationship and connection since then. And to your other example, though, Gilad, I wanted to also contribute kind of a failure story about a project that I had initiated at Munich Re when I was still in the claims innovation section. We basically had created a platform that would search, that one could search the internet for particular claims events, for example, and then it would extract the company names and persons and the relationships, interconnectedness of the companies in news articles relating to such a particular event. And it very beautifully, I think, visualized those connections in a knowledge map. And it actually was and served as kind of the shiny lighthouse project of Munich Re for a number of years. But we never really went further to really actively test it with customers and further adapt it. So that level of willingness to do that was missing in that case. And so I think eventually it was scrapped. But now you also mentioned another, well, I think it's not a buzzword, but a trend really, embedded insurance. And as you said, the timing now seems definitely better, possibly as players like Swiss Re and iptiQ have prominently appeared on the scene.
Yep.
When you were describing what you had been doing and you're learning from it, what I took from that was new business models are much more difficult to comprehend by anyone, really, not only the insurance industry, but anyone. And I think we tend to perhaps aim for, as if you're really passionate about innovation, you're aiming for, especially one of the early buzzwords was disruption, right? It had to be disruptive. And so you come up with a new business model that actually works and would work. But it's, as it is disruptive and different and new, it's more difficult to understand. And so it may easily first become a failure until then in an iterative process, somebody else picks it up and fills it with life. Would you say that's what's happening now? Or what's your take on that?
Yeah, I would say that my take on disruption, it's cool when you're in your 20s, then in your 30s, or really maybe it's not the years, but the experience of, or at least, going through one or two locations, and I would say more of a diversity of thought that you encounter over your career, then you realize that disruption is cool, but you need enhancement, you need empowerment, you need growth. Disruption, there is that vibe, but if you don't know how to control disruption, it's just going to break the house. It's going to create antagonism, and people don't like it. There is always going to be some sort of disruption, but you don't need to slap it into the face of people. It was super cool when I was fortunate to join TechCrunch Disrupt for a few years. If you'll Google me, you'll see my face going like this on the stage there. When was that? 2010, 11, or 12? One of those years. So it's been a while, right? And now I'm in my 40s, so we are looking for a different type of not startups, but basically products and services that are actually serving better. And this is why I keep telling people, it's like, yeah, we are all about, but we are pro agents. We are pro the why? because all of these people, and in the US, we are talking about 200,000 licensed agents. I remember that I was in Japan and I was talking to the folks at Sumitomo over there, and it's like, yeah, I was talking to the president of Sumitomo agents, something else, and only he had 180,000 agents. And you go like, and he's responsible for 20% of the market, which is huge. But then you have think about the other ones, right? Each one of them has at least between 150 to 200,000 agents. And their job is to go every month, knock on the door and collect the checks, right? Keep that relationship with the big brand. What's going to happen in a few years? They're going to retire. Well, they are Japanese, so only in 20 years they are going to retire, which means somewhere in their 80s. Sort of not funny jokes aside, there is all kinds of disruptions that we need to have. We love to talk about Lemonade as the big disruptor. They were the pebble, or actually the boulder, that was thrown into the lake of insurance and started the ripple of innovation and change, from how investors are looking at that, the people who inject the blood into the insurtech, and from startups going or entrepreneurs going oh, there is an opportunity, there is insurance. Later on we are starting to already see legal tech, agri-tech, all kinds of, and I love those two because they are very hard to use the technology. So everything which is gray is sexy. And that's not a joke or anything about 50 Shades of Grey. Not at all. Later on, yeah. So, no, sorry. Go ahead.
No, that's fine. I'm just wondering, Gilad, and thank you for that example. But I'm wondering if, as we were talking about embedded insurance, I was wondering if, considering all the...
I need to answer your question, actually, right? Because you keep asking, I'm starting to answer other things. Yeah, no worries. I need to do that. Basically, when you talk about embedded insurance, it's to be part of the customer service, of the customer journey, sorry. You embed the insurance as it's a byproduct when you want to do something else. So the classic example that we were all just sort of familiar with for many years, it's like when you buy an airplane ticket, there is a small check, do you want insurance with that? So that's perfect because you embed that insurance in the process. A great company here in Los Angeles, and recently they moved to San Diego, Matic Insurance. They early on created an agency, connected to everyone, and offer insurance. They embed their product and their offering in loan officers software. So when you want a loan to buy a car, but actually their focus was on mortgages, part of that, there is this weird back and forth to get a mortgage, you need the insurance. So already there, they recognize the bottleneck and said, this is where we're going to embed the insurance. And it's going to be part of the flow of the customer. The customer it's not like, oh, I want to go to do the customer journey and get insurance. It's like, no, he's on a journey to buy a house, to build a home, to raise his family, her family. That's their journey. Not, oh, I really want to go to insurance, to enter the insurance customer journey. No one cares about it. It's the same journey. It's like, oh, I'm going to get my cavity filled. I'm going to the dentist. Not really. So now when we are talking about, so those are examples of something that works. Something that will be with Intuit. You need to recognize where are those frictions, those digital touch points, and for which coverage and product it makes sense. Not everything makes sense there. There are products that will work. Their margin will work, their premium will provide, the embeddedness of that product completely makes sense from efficiency. But then there are those that, there is You know,
Very good point. Obviously about customer touch points, right? And somehow I do believe that embedded insurance will certainly work. It is, from my perspective, a bit of a dead end, or at least one very separate stream to write more business, of course. But what I mean is, if you embed your insurance policy into another product's customer journey, then you will hardly get an opportunity to build your own further customer touch points beyond the sales touch point. I mean, that is already left to that other retailer, let's say, right? That sales touch point where the insurance product is simply embedded. And the point I'm trying to make is, I think insurers need more touch points with their customers throughout the life cycle of the policy, so that they actually do get more data and understanding of where their own customers are, so that they can serve them better. But if if you embed your insurance into another customer journey, you basically waive your opportunity, your option to actually try to create your own customer journey for insurance. Do you think that's true, or do I see that too?
it is. Yeah, it's there. So it's there. It has a little bit more of a spectrum than just being binary. The range there, it can be 0 to 100. But again, it really depends on the product and the coverage. And now let's assume that, right? You have PL for yoga instructors or fitness instructors. Do you really need, they pay $150 or $200 a year. How much, what do you want? What else of interaction do you want with them? Do you really need it written, or is that someone that is going into your database? Later on, you're going to run your analytics and going like, I got another data enrichment company that give me a trigger here, and maybe I should reach out to them and try to sell them car insurance, or just an advertising, right? It's or because they're in that zip code and I have a few agents there, I should make that connection to that agent because they are a captive or they are part of this independence pool that I have. And I want to be nice to them because I want them to sell more. Because as we all know, there is a big gap of how carriers work with their captive or their independent agents and how much effort they have there, especially from incentives and keeping up that relationship. It's not straightforward. Especially for the independents, they are left behind, and there are a few captive networks that basically feel a little bit under the hammer. So there are all kinds of flavors for that. Yeah.
Okay. At this time, as we're halfway through the hour, I just wanted to invite everyone again, if you have any particular question you would like to ask Gilad or myself, please raise your hand and join us on stage. Otherwise, I was wondering, as I had said, we could talk about everything and anything with you, Gilad. And as I've taken a look at the various topics you've been touching on with your podcast guests, I was wondering if we can.
So we can talk about actually
that too. Yes.
No, go ahead.
In a moment. No, in a moment, please. But
sure.
Blockchain. I was wondering if in a certain way, blockchain was certainly a big buzzword a few years ago in insurance. It no longer is in insurance, might it be a next reborn trend, so to speak, now in the wake of NFTs and Bitcoins arriving at the moon and all of that?
Geez, you just opened the Pandora box here, my friend. So before I jump in and answer that specific question, let a quick background for the folks, because I never finished the background, which never does. So again, InsurTech LA, been running the in-person events for 4 years. Needless to say, lockdown, COVID, social distancing. Last year, this time, we stopped doing the in-person events. I tried to move it to a sort of a webinar. Didn't really work, or to be precise, I was like, why should I need to spend like a month doing marketing, telling people to sign up, instead of having this conversation on a weekly basis? There are so many interesting stories, amazing people in this industry. So I started to do a vodcast or a podcast, whatever. And as again, we are recording this and it will be in one of the future weeks. So that aside. So I think one of my early speakers was a German expat who lives here in Southern California, and he was especially, I think he was working for Tata or Deloitte or a big consultancy. And he was
Andreas Freund, right?
Yes.
And I'm cheating.
Yes.
I looked at your website.
You're looking. Cool. No, I'm trying to remember where he worked, but it doesn't really matter. And he basically coined one of the things that I really like about what he said about blockchain, that the analogy was it's a steam engine, right? It's the new power that provides you the scalability of force to future things. Now, in insurance, we haven't seen it yet. And there was a big buzz about it at the beginning, which frankly, I didn't really understand. And I'm still, besides smart contracts and parametric insurance, I still don't see blockchain as a thing. On the contrary, as I see that we have Pedro here, so his partner, Dan White, was a guest on my podcast, and we talked about sustainability. And every time that I think about blockchain or crypto, which is nothing to do, one is over the other, it's just different application and infrastructure. Every time that I think about it, it's like, holy shit, it's so expensive on the environment. This is not a sustainable solution. Now, when we deal with a small number of nodes, and it's not that big, it's not that big of a deal, in my opinion. Please correct me if I'm wrong. So there is still things to be done and to understand improving or making more efficient, or trying to understand, all the process of exploring that and extracting that information and validating. And I'm sorry, now I'm just going off the main path. But the bottom line at this point in terms of blockchain, frankly, I don't see that too much, with the exception of smart contracts.
Well, yes, and of course that's currently small, but potentially humongous, majorly disruptive exception, right? Smart contracts. But I just spoke with Markus Schmalbach about it, about parametric insurance and blockchain. And that is just one small example where I think kind of a prerequisite for smart contracts in insurance to gain ground, that the parametrization, if you will, of insurance contracts must happen first to make the coverage decision relatively, machine friendly, binary, for it then to be able to take off.
Yeah, completely. And you can think about it as a IFTTTTTTTT, right? If this, then that. And the only reason you need to understand, do you have a good case, a financial case or economic case for that? Because the smart contract, what does it replace? What does it improve? It improves claims. So what's the cost of claims? how many people you're going, to fire or to relocate. That process and time, that's the only reason to have parametric, because you're going to cut that off. And you say, you're going to have an increase of fraud, which that's one of the things that you remove. I'm going to have an increase of claims, but I'm going to settle it immediately. So we don't have the pyramid, we don't have the leakage. There is a lot to say about that financial forecast, especially from the cost and expenses of that operation. And once you have the parametric, it's like, okay, done. I'm just paying the claim, and it going under that ratio. So that will be the reason. Then you need to think, okay, how do we do that? Oh, it also have benefits from a marketing standpoint, right? Think about Lemonade. They built their brand on paying you in 3 seconds. They can say there is an AI. They can be just like, if claim equal pay, right? Then pay. So brilliant logic, but I'm sure that they have something much more complex over there. But from a brand perspective, it's also great because here is a marketing thing that you can build on and get. It's like, oh, look at, it's a word of mouth, especially at the beginning. By the way, they've done, and this is not an investment. So we are recording this, or this is for my case, 2 days after they had a drop of 3%, almost 4%, then 10% tried, and they announced car insurance.
It's a big field of around blockchain and smart contracts. I think there's obviously there's more to it in a way than just to cut out claims. I think in a more digital and therefore environment full of digital triggers, smart contracts can be obviously more easily embedded into even kind of smaller sub-processes, or a truly dynamic on-demand, off-demand, switch on, switch off solution becomes more possible. And perhaps one other aspect to it, if a smart contract has become so simple that it can actually be decided on by a machine, it'll also be easier understood by the consumer himself or herself, right? I mean, that's in a way one big shortcoming or challenge in the insurance industry, that yes, the sale is perhaps still working. Sometimes it requires quite some consulting and selling, but is the coverage and the exclusion part indeed understood or not, will only then turn out in the event of the claim.
So yeah, I agree with you. And one of the things that you can look at the application of blockchain is something that it's not retail, right? It's internal. So it can solve transfer pricing. It can solve all kinds, especially in bigger organizations. It's the functionality in the what otherwise you need to have all kinds of, I would say, costly actions that you want to solve at the end. Now, on top of that, if we're taking it outside of insurance to government, it provides some sort of a guarantee of, let's call it, not anti-corruption, but a certain transparency that will put people at check, right? Estonia is known to have done really good things about it, which means that every time that you have a government employee checking into information, you know who that person is. So it cannot be corrupted, it cannot be changed, and there is transparency of the node. So you as the citizen, or in our case it will be the policyholder, you know that claim adjuster or that underwriter check the case, and this is where you are. So there is no manipulation. There are different things that are clear, and you know where you are in the process. So that will give that transparency to the customer, not the policyholder, and not But again, there is a lot of opportunity within the companies and how they manage and what is the efficiency of transferring data and disseminating information within it. Because one of the things that we are really bad at in insurance, and maybe it's because the structure, the culture, it's siloed. Each group, because of mergers and acquisition, because of God knows why, there is so much siloing of data, of information, and cross-pollination between the people of the same company that it's very hard to communicate. And having that on different nets and different nodes, that can provide maybe a little bit more, I would say, touch points that can double the power of the company as a company. But again, it's I can find a business book that it's coming from if you're interested.
Now, I've kind of forced you to talk about blockchain and topics that I hadn't really alerted you of before. Has there been any topic or particular conversation that you've had now as you've been doing your video casts, vodcasts for a while? And has there been anything that you have found to be particularly rewarding, particularly exciting, apart from what I would like to point out that I've already learned from the few weeks of having done these sessions here? It really, I feel, puts you in touch with super interesting people and helps you start and have new and really fascinating conversations again that otherwise I wouldn't have had that way.
So I would add to that, and that's something that it's not that public because it's not on my LinkedIn. I've been doing work with the folks at the ITC. So the beautiful people of InsurTech Connect, I'm working with them towards the next Vegas event, and it's beautiful. And that even gave me another opportunity to talk to many folks. And, the main thing that people are always looking for is the connection. And that's the beauty of, especially of InsurTech Connect, because the core of it is connecting people. Now, that topic is always interesting to me. How can we connect the right people together and understand what is the real need? It's from the partnerships of a new program, a new insurance company, a new, when you talk, it's like, oh, we are looking for distribution. It's like, okay, great. Which product? What's that? Does it make sense to you? Do they have enough capacity? Can you, if it's commercial, can you provide the right risk? Can you understand the risk classes and all those things? The other thing that is really interesting for me nowadays, and we've been doing a little bit of, let's call it stealth mode, which is not stealth if I'm talking about it, are investments. So as we are progressing, that's, I would say, a little bit challenging to bring insurance companies and especially the CVCs on the show because it needs to go through PR and you have the full approval process. He's talking about the investments and where are we stand today with, let's call it the third, if not the fourth wave of InsurTech startups. Now, at the same time, it's super exciting because we have the IPOs and that's liquidity. And the other part of it, it's like, okay, great. How do we empower or, understand better the place and the potential of the early stage startups? And do we still have that mechanism and, folks who are joining?
And that's a very exciting topic because I think it's been tried to understand that potential of startups early on better through accelerators, right? And through setups
Hmm.
like that of plug and play. Now here on Clubhouse, there are a number, uh, I don't know how many, but many clubs and even more rooms in which startups get to line up and pitch 30 seconds, 60 seconds, um, supposedly or truthfully, with potential investors in the room as well, who then get in touch with those startups. And it's probably a bit of an El Dorado phase right now here on Clubhouse, and hard to distinguish which one of those rooms is fake and which one is real.
What do you mean by fake?
I mean that it's potentially not really investors involved
Ah,
in the room, right? And
gotcha.
no one really intending to invest anything, but only to hear about great new ideas, perhaps. And yet you have thousands of people in those rooms listening to all those ideas. And I think that is, as far as I haven't really done much research on that, but I think that has been a bit of a nucleus of Clubhouse to actually also in the pandemic time get access to these very early stage ideas, and to keep that flowing. Um, have you attended any of these rooms or been aware of those?
So Clubhouse is okay. So Clubhouse, it's interesting. Um, yeah, yesterday I think that one of the guys that, class, what I forgot his first name. Ooh, that's embarrassing. He was with Amfam, now he's with MV. Great. I will need to figure out that later on, and that's super. Oh, Patrick, or Patrick Class. Jeez, yeah, man. I'm sorry for completely butchering your name, but that's for all the times that you butchered my name, sort of. Yeah. So he's been running his Clubhouse room for every Wednesday at 4:30 p.m. Pacific time. So that will be a good conversation. Otherwise, I yeah, I joined a few rooms. Nothing really, There are a few that are just hype. Then you have a few that are a little bit more serious. It's good to explore it. I don't say don't. There is a little bit of serendipity over there. At the same time, hey, we are on Clubhouse, so you know, it's another outlet for and I think that they are doing great in terms of that metrics of growth. I read that they are raising Series C or Series D in like 2 months or whatever that is, because hey, they have so much growth and traction. I will be super curious to know what's their business model and how they're actually going to monetize it later on. But sometimes, in Silicon Valley, you don't really need a business. Look at Juicero. It's like, oh, what do you do? Well, we squish. That's what we do. You buy a plastic full of juice, and we have a $400 machine that just squeeze it together. Yeah, so
Only in America.
not only, there are people who buy all kinds of things. So think about our buddy Nigel Walsh, right? So now he's with Google, and we are going to hear about it for a century. But he's a big advocate of Peloton, which I hope I pronounced correctly. In my opinion, it's a cool or a very expensive clothes rack that will be in the living room post-pandemic. Is he going to keep using it? Maybe he is. I don't know. Yeah, he's a different character. But if it was me, and that's why I don't have the best I have for exercise is this pad. It's like a knee pad. So when I do my push-ups, and I do it on my knuckles, I will not do it on the floor. But that's the best. Talking about sports and completely butchering this conversation in the middle. So how many push-ups do you do now? Because last time we checked, you were like almost 40 push-ups or 45 push-ups, something like that.
Well, I guess in the insurtech world, you would call that a pivot.
No, it's
and
just changing the conversation.
yeah, over to health tech, right? Without the tech, actually low tech, but without talking too much about that now. I mean, I've resorted to the very basic fitness regime, and the last few weeks I've taken a break from that again because my schedule's been too crazy. But I just started doing 5 sets of about 30 push-ups or so, which leads to impressive total numbers, and is something I can only recommend to everyone, whether you've been preached push-ups by your behated school physical ed teacher or your parents or grandparents. I can highly recommend them. Now, that'll be interesting to summarize this hour, Gilad.
Yeah.
We're we're close to completing the hour, and at this point, I usually invite everyone again to pose any question that you may have to either one of us, because to me the beauty of Clubhouse is indeed this, and we have Connor, who's actually taking this opportunity. Thank you, Connor. I just wanted to complete saying that to me, this is indeed one of the super fascinating features of Clubhouse, how easily and how at eye level, in a way, listeners can move from being listeners to speakers. And with this, Connor, please ask your question.
Yeah, hey everybody. This is my first time on stage, so be nice. I want to get maybe your two opinions on kind of this issue I've been running into in the insurtech world, especially around venture capital arms of insurance carriers themselves. I found there's kind of a big range, and sometimes it's kind of hard to tease out which of these venture arms are truly there to invest in insurtech opportunities and which of them are there for really more of fact-finding missions. In my experience, I won't name any names, but one of my most recent calls, it was the venture capital firm, arm of a big carrier, got on the phone with us, but along with their whole P&C team, they also brought their people from the carrier side onto the call. We thought it would be an introductory call, and 45 minutes later, we got blasted with pretty much every single underwriting capacity. What's your program look like? What's your distribution? What's your premium? What's your policyholder count? Who's your average? What does that policyholder look like? And I just found it kind of completely inappropriate for the VC to bring in the carrier arm to do kind of this fact-finding mission. So I just want to get your opinions on that's something if you ran into that often, or if it's I'm just uniquely unlucky in that capacity.
Ooh,
You're not unique, Connor, I think. But Gilad, go ahead, please.
No, that's a classic. I would say this is when you really need to read the table and understand, is that a brain rape or not? And it can look, yeah, it's challenging even to answer that, because there is a lot of reading the table there and understanding who is the investor and how much are they linked to the company. And ideally, so let's take one step back. So CVCs they can be in two ways. They can be an investment that investing out of the balance sheet, or they have their own fund and working independently. At the same time, for the political reasons, they are not just investors. They need to make sure that their investment will be part of the company strategy, although those companies, especially if those are MGAs, can benefit their competitors. So there is that element. Now, the benefit, right, that you're supposed to get out of a CVC, unlike any other VCs, that they understand insurance and they can also provide you with introductions to the company itself, right? Now, in your case, I assume you are an MGA or an agency? You have your own programs? Yeah. Ah, fantastic. So you're even specializing in a specific product, which can be part if they have competitors, if that CVC represents a competitor or a great bundling. So there is some sort of a opportunity there to partner up, right? So completely makes sense that they will bring the people and will ask you the professional question. Now, then there is how much you can tell them. Now, a good VC will stop you there and say, I'm invested in a competitor, so I will need to excuse myself out, or build a wall, or whatever they like to call it. And I met a few of those. Then there are folks that will gather the information and hopefully will not share it with their portfolio companies. In this case, the portfolio company is the company itself. It's not the portfolio, it's the company. And then it's a question if the information there to really understand if they can work with you, because those questions, they need to understand if you're a suitable partner. They need to know who are your policy holders? How do you underwrite? What's the premium? Does it make sense for their risk intake? Those are very legitimate questions because they need to do the due diligence. Now, the problem is that they don't play fair in terms of telling you or answering the same questions if you will ask them, because they assume that although it's not public. So it's always there is that big company, small company, which is more for the employees that join that CVC when they ask you. And that's something that needs a little bit of correction in my mind, which is like, oh, you're asking me about my underwriting. Please, can you tell me about your underwriting? And it needs to be a little bit fair so you can understand that is there something beyond the brand of that company that you want, whatever the partnership that you were looking for. Is it capacity? Is it the paper? Is it distribution? I don't really know the case, but so it's a little bit of an assumption here.
We had Victor earlier who had raised his hand, but I couldn't somehow bring him up on stage. I don't know if my version didn't allow me to have more than one speaker on stage. That's unusual. So I'll reach out to him afterwards to let him know. Thank you for asking this question, Connor, and I hope it was somewhat helpful. Perhaps Gilad knows a few more VCs that have a good or a bad track record and can share his views on that with you afterwards. Other than that, because we've already gone beyond the 1 hour that we usually aim for, I think we've had a very, very wide range of topics to a certain extent in this hour. We've gone from fail fast and dare to fail, perhaps, but explain business models, if they are different from the traditional ones, very clearly and well to those incumbents you want to work with, and perhaps be ready to iterate a few years down the line again if you failed with that effort, as the example of embedded insurance seems to be showing right now. As Gilad said, disruption is cool when you're in your 20s. Perhaps beware, there are very few working in insurance in their 20s. So they don't like disruption too much. And we've covered blockchain a bit again, and Gilad's lessons from his video casts. And finally, thanks to your input, Connor, a very real problem and challenge in working with these incumbents and their corporate VCs. Thank you all for that. If you have any additional questions afterwards, feel free to follow us or reach out to us on LinkedIn, perhaps. Gilad, did you have any other point to make?
So, Thomas, thank you very much for having me today. Thank you, everyone, for joining. It's been a very interesting conversation, and especially the experience of as we are talking on Clubhouse and recording that as a podcast for InsurTech Talk. It's very interesting. And buddy, thank you again. And I hope to catch up with you and everyone. If you want to reach out, just ping me on LinkedIn and we'll continue the conversation from there. Thank you.
Thank you. Cheers. Thank you.